The political problem is, how do we grow the economy of the United States? How do we deliver prosperity to our people? And how do we overcome a deficit? And all that while maintaining global leadership. So everyone, every institution, every investor, every company, every politician is struggling with these problems today. Bitcoin's the solution. Why is it the solution? Is it the solution? A lot of people are wondering that. Well, I'll put the Bitcoin return for the last 4 years on this chart I just showed you, and you can see Bitcoin is just punching a hole in all the traditional capital markets.
Michael Saylor begins by framing the economic challenges facing governments and institutions worldwide: growing deficits, stagnant growth, and the struggle for global leadership. According to Saylor, Bitcoin provides a unique solution to these problems by acting as a superior store of value and a financial innovation capable of revitalizing prosperity. Unlike traditional investments tied to depreciating assets like bonds or fiat currencies, Bitcoin's consistent outperformance makes it an obvious choice for long-term wealth preservation. Saylor illustrates this by comparing asset classes over the last 4 years.
Please take a little time to like this video, subscribe to the channel, and turn on post notifications for more videos like this. You can also check out our other videos on cryptocurrencies and the overall digital asset space and drop your comments and observations in the comments section below. Everything you do helps with the YouTube algorithm and immensely contributes to the channel's growth. Thanks and enjoy the video.
This isn't 1 year or 2 years. This is 4 years, but you know, it happens to be the 4 years since MicroStrategy decided Bitcoin was the solution. And you might say, well, you cherry-picked that number. That's the low number. I cherry-picked that number because the other numbers are better, and I'll show you that in a second. If we look at this entire set of asset classes, they line up kind of elegantly. If you're actually holding bonds for the last 4 years, you lost 5% of your capital a year. They're losers. Every bank in the US is capitalized on bonds. Every operating company is capitalized on bonds. You wonder why the banks are sick? You wonder why the operating companies are sick? They're sitting on those minus 5% instruments, and that's their best idea. Gold's plus 6%. You might as well just hold gold. Real estate's plus 10%. The S&P is 15%. You can double it with the Magnificent Seven. Find the best companies in the S&P, the NVIDIAs, the Apples, the Googles. 29%. And this little creature we call Bitcoin is doubling that, 60%. And when you look at that chart, a lot of things become pretty clear. But this is the past 14 years. Bitcoin's not just winning. I mean, it's up 78% in 8 years. It's up 103% in 12 years. It's up 168% in 14 years. It's consistently winning, and at some point, if you look at the numbers, you start to wonder, well, why is it winning, and is this a fluke? And the irony, of course, is that you still get questions from the normies every day, like, well, when does the run stop? It's like, when do nuclear reactors stop producing more electricity than water wheels? You know, when does the airplane stop flying faster than the donkey cart? The answer is it's not going to stop because it's structural and technical. Everyone in the world is searching for an asset uncorrelated to the S&P 500 with higher returns, uncorrelated and performing. It's the holy grail. Banks have conferences on this stuff. Well, Bitcoin is that asset. It's an asset without the counterparty risk that comes from competitors, countries, corporations, creditors, cultures, or currencies. Everything else you own in your life has a counterparty risk to one of those items, except Bitcoin. Bitcoin is, in essence, orthogonal to the rest of the market. That makes it alpha. But you don't have to believe it from first principles. You don't have to study it. You can just look at the data. This is fidelity data. It's showing the lack of correlation and the Sharpe ratio. It's got the highest Sharpe ratio. It's got the lowest correlation. So even if you haven't read the book, The Bitcoin Standard, even if you haven't thought about it for 100 hours or 1,000 hours or 10 hours, all you have to do is just run the numbers. The market is screaming at you that it's an uncorrelated, high-performing asset. Here's the 21-year Bitcoin outlook. Okay, you can Google this, Bitcoin 24. Go, you'll find it on GitHub. Download the model, put in all your own forecast assumptions about inflation, innovation, and the like. I'm going to show you mine. Back to our map of assets. I'm looking out over the next 21 years. What's going to happen? Well, I assume technology is going to continue to advance. We're going to harness AI. There's going to be a lot of incredibly valuable companies. Bitcoin's going to grow rapidly. Gold's going to be gradually demonetized. Equity's going to grow a bit faster. Real estate, about the historic average. Basically, the money supply is going to expand about 7% a year. Some assets are going to stay on that glide slope. Some will slightly outperform it, like equity, like Bitcoin. Some will slightly underperform it. That gets us to this forecast, which I presented in July of 2024. Bitcoin grows in my base case, 29% ARR up to 13 million a coin. I think it grows faster in the first 4 or 5 years. It's growing 50 to 60%. It's going to decelerate from 60% at some point down toward 2 times the S&P index. But you can see every Bitcoin you don't buy today is going to cost you $13 million. A lot of people think, well, you know, the world's going to turn upside down. No, it's not. The world is not going to turn upside down. In 21 years, the world's going to look pretty much the same as it looks right now. There'll be a lot of real estate, a lot of bonds, a lot of currency, a lot of equity. There'll be a ton of trillion-dollar companies. There'll be $10 trillion companies. The only difference is if you didn't buy Bitcoin, you won't have made that money, right? There'll be a whole class of people that use Bitcoin as a capital asset. And the big winners should be Bitcoin and equity. As you know, AI makes all the cars drive themselves, and someone produces 1 billion robots, and the robots make the robots. If the robots make the robots, then presumably the company that owns the robots that make the robots is going to make a lot of money, right? So it's going to be a good future for high tech, for the people that can harness that.
Bitcoin is more than a digital currency. It is digital capital. This distinction is crucial because it highlights Bitcoin's role as the next evolutionary step in wealth management. As Saylor explains, we are witnessing a seismic shift from financial and physical assets to digital ones. This transformation isn't just about convenience or efficiency, it's about fundamentally changing the way humanity preserves and grows wealth. For Saylor, Bitcoin represents the future of global finance. Ignoring it isn't just a missed investment opportunity, it's a failure to adapt to a world rapidly moving towards digital capital.
This is the wealth in the world. It's distributed across real estate and bonds and equity, and the little block in the lower left corner is Bitcoin at 1.8 trillion. Incidentally, when MicroStrategy got into this, Bitcoin was 180 billion. So we have 10x'd, and that's just in 4 years. But here's another way to see that chart. And this is the most profound insight of the day I'm going to give you, that I think the majority of rich people and the majority of corporations and the majority of money managers still don't get this one idea, which is half of the wealth in the world is invested in assets in search of a long-term store of value. People just want to engage in long-term capital preservation. Another way to say it is, I just want to stay rich. I want to keep my money. There's no one you'll meet that doesn't want to keep their money, right? There's no government, there's no corporation, there's no wealthy person, there's no poor person. Nobody wants to lose their money. So the circle on the right is $450 trillion blob of long-term capital, right? Next time you hear someone say, well, what's the Bitcoin use case? There's no use case. The use case is the most valuable thing in the entire human race. It's $450 trillion. It's all the capital in the world. The use case is you get to keep your money, right? That's actually the epiphany. Once you understand that people are using assets for 2 reasons, long-term capital preservation, or the second reason is utility. Your yacht, your jet, your bakery, your farm, your ranch, your plane, company, that's utility value. Your piece of art you put on the wall, it's utility. Half this stuff is for utility, the other half is capital preservation. And the challenge with preserving capital is you either do it with financial assets, and they degrade over time due to entropy. Everything you invest in is subject to weather and war and tax and inheritance and income and excise. And these are the risk factors in every 10K. They degrade the capital. And so people that want to get away from financial assets, they buy land and they buy buildings and they buy physical items. But entropy degrades them too. There's a hurricane coming, in Florida right now. It's going to hit in the next few days. You can't buy hurricane insurance. You're just living with this chaos in the real world. And of course, I could talk about the litany of ways that your physical capital breaks down, but you all know it. What's the cost of entropy? What's the cost of chaos, confusion, and competition, inflation, politics, and war? Well, the cost is like 3% of $450 trillion. The cost is $15 trillion a year. It's trillions of dollars a year. Someone says, well, what's the use case of Bitcoin? It's like, well, we're not going to lose 10 trillion a year. Like, you get to keep the 10 trillion, right? That's what's driving people to Bitcoin. When you live in a world without Bitcoin, and you live in a world of capital assets that are physical and financial, you see your useful life is 10, 20, 30 years. If you buy a Ferrari or a yacht, you're probably not going to preserve your capital. But most people buy 10, 20, 30-year useful life assets, and they struggle and worry about them. How many people worry about their stocks every day? Worry about their building, worry about their business, worry about currencies, worry about bonds. There's an entire industry of worry. That's a constant struggle. This guy, Satoshi, came along and discovered a method to transfer value without a trusted intermediary. And everybody repeats it ad infinitum. Satoshi figured out how to send something of value between two people without an intermediary. But that wasn't the brilliant idea. The idea that's so profound it shakes the foundation of the economy is that Satoshi figured out a method to store value without a trusted intermediary. Because sending the value, it's like a little bit better than Visa or the Fed wire. Storing the value, well, that makes it the most useful thing for $450 trillion of capital. That's worth 10 trillion a year. That's the big idea. And it's a very poorly understood idea. Bitcoin represents the transformation of our capital from financial and physical assets to digital. What we've created is an asset without financial risk that's in a currency or a stock, and without physical risk that's in real estate or property. And that makes it digital capital. Not digital currency, digital capital.
Michael Saylor's insights illuminate why Bitcoin is far more than a speculative asset. It's a revolutionary form of digital capital poised to reshape the financial world. Its unparalleled performance, uncorrelated nature, and ability to preserve wealth in the face of entropy make it the ultimate solution for long-term capital preservation. The question isn't whether Bitcoin will succeed, but whether you'll be part of this inevitable future.
Please like and subscribe my channel.